MicroMoment podcast. And we have Micah here today, and Randy and myself. Our other person, Deshaun, is in the process of moving, and Tim is on the road, so he couldn't call in. But anyhow, welcome. We had a super good day. We had a good day today in the MicroMoment trading. We're in our 64th week, the third day of our 64th week, and we've averaged, since it became a subscription service, 93.46% per week over those 64 weeks. Prior to that, it was just our own personal thing that we did, and now it's a subscription service. We did 5.76% today, and for the week, we've really pretty good for the week. We're up 56.33 as of today. Now, if these gentlemen do a second session, then that will go up. But right now, we're up 56.33. So we got a good chance of getting close to 100% for the week, and we've done that many times in the past. But we'll see. We'll see what happens. We get back here down to our deal. There we go. Go to our website, www.micromomenttrading.com, and sign up for our free cow report. It comes out every Friday afternoon. It's been published for over 20 years. And it's got all the trades. You'll see all the trades in there, and all the questions and comments and how people are doing, and just everything on the traditional covered calls. We no longer have that website, the CSE site. It got too confusing. So now everything that was on the CSE site is in the MicroMoment Trading site. And go in there and sign up, and you can get links to our, not only this podcast, but to our YouTube MicroMoment sessions, which are full hour sessions. And you see the entire sessions on YouTube. You can see how these things work, how Micah and Deshaun and Tim, use our advanced proprietary charting to make up trades and execute those trades. And you can follow right along with them. And I think there's 4 or 5 of those sessions on the YouTube. Just go to YouTube and put in MicroMoment Trading, and they'll pop up, and you just pick out the one that you want. What else am I leaving out here? Anything, guys, for the moment? Okay, let's start off with Randy. Randy, so what's going on today, and how's it going?
It's going great. Thanks, Joe.
Oh, how was the game?
We won again.
Fantastic.
I pitched 3 scoreless innings and went 2 for 2, and we won, I think, 10-2 or 10-3.
Fantastic. Great.
Yeah, we're in first place in our division, so
good.
Looking forward to into the season when we get to play first place in the other division for the playoffs. That'll be fun.
Yeah, Randy's our baseball player, and he goes all over the country in these senior league. Is that what you call it?
It's called MSBL, Men's Senior Baseball League.
Oh, okay.
And everyone always says, "Oh, you mean softball?" No. It's baseball. Regular rules, just like the pros. So
real baseball.
Real baseball, overhand pitch, and the whole thing.
Okay. So why don't you tell the folks what you do?
Well, I do a couple of things. I teach the advanced charting webinar, coaching webinar every Monday morning, where we go through advanced charting. And what advanced charting does is it looks for it's 21 technical indicators all rolled into one chart, and we teach an easy way to learn how to read that chart to identify the beginning of the rising cycle. So we're looking at the very beginning of the cycle, and excuse me for a second. Gotta take a drink here.
Okay.
The throat was getting a little dry.
Okay. Hey, before you come back on,
yeah.
I forgot to tell. If you want to make a comment, you can type it in, and it'll show up on the screen here, and we will read your comment and answer your comment. So go ahead, Randy.
And so we teach you how to read that chart to identify the beginning of the next rising cycle. And therefore, we enter what we call a momentum trade, simply buying a call, letting it go up, and selling it for a profit. Typically, that takes about 1 to 2 days to have that increase. Sometimes it's in the same day. it's been as fast as 2 or 3 hours if it's really, really good rising momentum. So we go through a large number of charts every Monday morning and identify potential positions that are getting ready to meet that criteria. It's also kind of a good stepping stone for a slower paced version of what Micah teaches. And so it's a good way to kind of learn how to read charts at a slower pace, identify when you have these crosses. So then when you get into Micah's, and he'll talk about that, it's very, very fast paced. And so it's a nice slower pace. Now we're working on updating the advanced charting seminar. And so Dirk and I are working on that. We are shooting for potentially sometime next month of having the next advanced charting seminar. So kind of for all the current clients out there of MicroMoment Trading, you can be on the lookout for email that'll let you know the details on that. So in addition to the advanced charting and momentum trading, I also teach covered calls. And on Wednesday morning, we have a 2+ hour live in the market coaching webinar on the advanced covered call techniques. And for those that don't know what a covered call is, a covered call is basically you buy a stock and sell a call against it to generate income. Now, the process here that we teach is buying the stock, selling in the money covered call for a profit. Therefore, we want to be called out, and we want to be called out as soon as possible. And therefore, that's why we sell in the money calls. But being called out generates profits and generates income. So we're basically looking to do that week by week and generate weekly income. On Wednesdays, I teach an advanced covered call technique where we use synthetic covered calls as opposed to buying the stock. And we're in and out of positions typically within the same week. And so like last week and during the webinar, we go through the process, identify new positions, but also during the week when I find a position that I'm actually going to put in my own portfolio, I send an email out, an alert that says, here's what I'm getting ready to do. Here's the technique that I'm implementing or the next step in the process. And the intention then is everyone can follow along step by step in their virtual trading account. So not risking any money while you're learning. And you can see exactly how all of the processes and techniques are implemented real time right there in the market. So you can look at the chart at that time. You can look at where exactly the stock is at that time. What are the prices? And you can get those in your virtual trading account and follow right along step by step. Last week, all the ones that I sent out actually closed out on Friday or before Friday for all capital returned and a profit locked in. So IWM was 14.9% return and only 87 cents a share invested. So these synthetic covered calls don't require a lot of capital. QQQ, which is the ETF for the NASDAQ 100, 9.8% on 91 cents a share invested. RTX Raytheon, 19% return on 84 cents a share invested. JP Morgan, 25% return on just 40 cents invested. Apple, 5% return on $2.38 invested, and that one was only for one day. And Amazon actually broke even on Amazon during the week. I entered it on Monday and managed it throughout the week as it dropped $300 a share. And so just to talk a little bit management, what we call management is being able to manage or modify the position along the way, whether the stock is going up or down, to continue to generate income until we get our capital back. And so Amazon dropped $300 a share during the week, and I was still able to manage to exit it on Friday with all of the capital return. I didn't actually make a profit on that one. I just got all the capital back, even though Amazon dropped $300 a share. That's the power of the management techniques that we teach. You're not going to find those anywhere else because that's not what the market does. They just sell for a loss and go on to the next one. We don't do that. And then GILD was the last one, 9% return. That one was only for 3 days. I actually closed that one out on Wednesday, entered on Monday, closed on Wednesday for 9% return. So that's the type of activity that we take place in. Sometimes a position doesn't close out on Friday, then I keep managing into the next week or the following week, whatever that it takes, to continually generate income while working back to getting all of the capital return. So actually, I just entered, just before the webinar began, I entered a synthetic cover call on Apple for expiration tomorrow. And so it would even allow Apple to drop. Apple's at 383 right now. It can go down $11 a share, and I'll still get all my capital back that I just invested, plus have a, let me calculate that, plus have a 6.4% return. And Apple can go down $11. Now, it hasn't gone down $11 in one day in quite a while. It could do that, and if it does, then I just manage that position into next week and keep working on generating income while working to get back the capital that was invested. So that's the goal, is to get all the capital back by the end of the week and lock in returns or profits along the way, and do that week after week after week.
Yeah, what Randy's doing is like in the real estate business. He's buying an apartment or a house and renting it. He buys that stock, or he buys that LEAP, which stands in the place of the stock and only a fraction of the cost, and he rents it. And when you subscribe to his seminars, you get each one of these trades. They're real trades. They're real live. They're in his account, and they're doable. You know, and they're a little slower than the macro moment. The average life of a macro moment trade is around 15 to 20 seconds, and we'll get into that when Mike starts talking here. But the other thing that Randy's having with the synthetic covered calls, which is instead of buying the stock, he buys the stand-in for the stock, the LEAP, which is called a LEAP. It's a fraction of the cost. Like what does what's your Apple LEAP cost? You know, Randy.
But Apple, I actually bought the option that expires tomorrow, but it only cost. It was a total of $2.35 per share invested.
$2.35. Okay, versus hundreds and hundreds and hundreds of dollars.
$383. Yeah, $383 for the stock.
So what he's doing, he's getting maximum leverage here, incredible leverage without borrowing money, without using margin, which is death in the covered call business and death in the stock business. So he's not borrowing any money, and he's using the LEAP instead of the stock, and his technique is exactly the same when you do a LEAP as if you had the stock. The only difference is you're making a hell of a lot more money without hardly any of the investment. So you should really go to the website and look at what he's doing and communicate with him, because he's just excellent. And Randy, I think we're going to I'm asking Sue Ann today to set up those 2-day seminars, which we just finished this last weekend. It's a 2-day seminar, and I conduct it. It's all day Saturday, all day Sunday. And these gentlemen participate along with Dijon and Tim, who aren't here at the moment. And they're great seminars. They go from about 9 in the morning until about 3 or 4 in the afternoon, covering the old traditional covered calls. Now, the reason we combine MicroMoment in there is because Randy has developed smoothly since we started doing MicroMoment a lot of his traditional covered calls that are in essence sort of morphed MicroMoment, and he may be out in not 20 seconds like a real MicroMoment, but maybe 15 minutes, 10 minutes, 2 days, whatever. They're really, really great techniques, and it's a real good alternative to the MicroMoment. But anyhow, you've been doing this now for a long time, 14, 15 years with us. And it's just, you just don't stay in business that long doing something unless people are profiting from it. We still have people to come to the seminars, like this 2-day seminar this last weekend, that we're doing Randy's deals 14 years ago. And they're just incredible stuff. And okay, let's talk about over here with Micah. Let's talk about MicroMoment. MicroMoment technique is our latest technique. And again, we've been doing it. We're at the middle of the 64th week. and the average returns weekly 93.46. Probably Randy's returns are about that also, I would think. Would you say, Randy? Right around 100% a week or so?
Well, if you added each of the different positions up, but if you're looking broad-based over the portfolio of the capital that's actually invested, it's in the 4 to 5% for the week.
Well, no, it's you're talking about per.
No, but if you add up all the per trades, yeah, it's definitely
per trade,
over 100%. But
yeah,
but Micah keeps using the same money over and over and over again. Where with the synthetic cover calls, it's each position is new money until it closes out at the end of the week.
Yeah.
So,
okay, now let's talk about this MicroMoment here for a minute. The neat thing is, like Randy said, we use the money over and over and over. For instance, if you took $2,000, put it into a trading account, and just did the MicroMoment, and you earn 6% per week. Now, our guys over there, Mike and Sean and Tim, are earning 93% a week. So if you're just following those trades, you earn 6% per week on that $2,000, never putting another penny in. In fact, best to do it in an IRA account, and you just keep investing the money you make from that $2,000. You're compounding it. In 24 months, you've compounded that at 6% per week, not per day, but 6% per week. You're up to around $500,000 or $600,000. That's the power of that MicroMoment trading. Again, they're not they don't care when they turn on their computer in the morning. They don't care if the market's up or down because they're trading the volume, and they're using indexes like QQQ, and they'll use Apple stock because it's so powerful, and SPY, SP 500. And by the way, it's going to be interesting to see what happens to the S&P 500, Randy. They had to have 4 quarters of profits, and they achieved that yesterday. I'm talking about Tesla.
Yeah, Tesla.
Now Tesla is eligible to be put into the S&P 500. I'm not sure when it happens, when they do that, but it should make a huge effect on the S&P 500 because they will be the largest company of all the 500 companies in the S&P 500. They're larger than all of the domestic and few foreign manufacturers that everybody's familiar with, car manufacturers, combined. They're bigger than all those combined. So it's going to be huge when they do trades along those lines.
So speaking of Tesla, I didn't send this one out to the group because this is just an extra one that I implemented yesterday. But yesterday afternoon, I actually did one of my synthetic cover calls on Tesla and closed it out this morning already, and it was 44.1% return. So I entered it
huge
in the afternoon yesterday, closed it out in like 15 minutes this morning. So it was just in basically overnight. 44.1% return on, and Tesla could have dropped even $100 a share, and I would have still got the same return.
Yeah, incredible, just crazy stuff. And Marion has joined us. Hey, good morning, Marion. And don't forget, if you want to make a comment or say something, type it in there, and our engineer Marcus will pull it up here and put it up, and you'll be able to see it, and we will address those questions. There's like Marion, happy Thursday. There you go. Mary's our happy girl. Marion's attends the sessions, which are 8:30 to 9:30 Central Time on the MicroMoment. It's just 30 minutes. And they'll do, like today, they did about 4 or 5 trades. Sometimes they do 9 or 10 or 12 trades. And just, in and out. And you're always back to cash in the MicroMoment. Always back to cash. Never going to trade for, a minute would be an extremely long time. Extremely long time. Just in for a few seconds, and you're out, and then you can go home. But so, Michael, why don't you kind of flower that up a little bit about what I was talking about. And Mike has been with us here, I don't know, 5 or 6 years, and he's our specialist in the MicroMoment, along with Dejan and Tim, who are not here today. Go ahead, Mike.
Yeah, I mean, you pretty much covered it. MicroMoment's been going well. We have some new people from that covered call seminar we did, so we've been teaching them up and getting them ready to go to battle. But it's a good time. Interesting week for sure with everything going on. We're seeing a slowdown in the some of the ETFs. They're slowing down in a weird way. The stocks aren't necessarily, but we're seeing a lot of some complex options things happening, some complex effects happening on the options that we're trying to trade on the ETF. So we had a trade today where I was in for, I think, 14 seconds total. Entered at 189 and sold at 187 14 seconds later. I clicked out, and it turns out the spread had opened up like 10 cents, and that's where it pulled me out. So we have to be very aware. Even I do have to be more hyper aware of all of these things happening. How often do you hop into something and then 13 cents just opens up? But we still have to account for that, right? So we've been learning a lot of lessons, staying overall positive through this, which is great, and continuing to adapt. I mean, that's honestly the biggest thing for the market, is to have a baseline technique that doesn't change, and then be able to make those little micro adaptations based on your technique in that market. A lot of the lacking we see in a lot of other financial areas is based in the fact that most techniques are built on some sort of hot trend, some sort of real-time market event that's going on, and then they build a technique around that, as opposed to having a baseline technique that is sound, and then making the micro adaptations based off of the market, which is how that order should go. So we've just been continuing to do that, and it's going well. And
let me interrupt you a second. When Micah and those guys are doing their sessions in the morning, you're watching them, and it's on go to webinar or whatever, and you're seeing those trades. They have a chart up there, and you're hearing them walk through every one of those trades, every one of them, and you follow that, and pretty soon you learn it, and you hear people coming in during those sessions telling us how much money they're making, and it's absolutely, just incredible amount of money that they're making, even brand new people. There was a Patrick that's brand new this week, has had just incredible trade. He's brand new. And the reason you learn this stuff, so you're seeing them do it, and you're hearing them do it. It's not like they're just kind of blowing in the wind. And we don't have a book for that technique, and won't have a book for that technique, because there's only one thing you do. And if you see a red light, that means that thing turn into a loss, you get out of it. Now, these guys have gotten real good where they're getting out 1 or 2 cents. Loss, they turn around maybe within a couple of minutes and back in the same trade again and out with a profit. That's what they're doing, and that's what you're learning. That's why you can learn it that way. Randy's is much more extensive because he's got techniques to take care of any position, anything that happens to a stock. You get into it, it goes up, it goes down. He's got all kinds of things. If you don't want to get out, you can stay in and keep making money every month. If you want to get out, he's got ways to do that. So his book's 300-something pages, but they don't have a book. They don't need a book. That's why you learn that so fast. Okay. Oh, Marcus, can you pull up James here? He has a question for Micah. Okay, go ahead, Micah.
Understanding correct that you use Option Station Pro within the TradeStation app. Yeah, I have the full TradeStation platform, and then Option Station Pro is just their option chain. Once you click on the strike price you're going to trade, it auto loads it into the platform's ticket. So it's very integrated. I wouldn't call it like a separate app or anything.
Yeah. Also, Randy didn't mention it, but when you use Randy's technique, we have a toolbox. And toolbox is exactly and precisely facilitates everything he does. It's a management technique. There's option change in there. There's all kinds of other things that when he mentions something, he's probably using that toolbox to effectuate that trade. And you learn all that stuff. So.
And another thing, Joe, is it's everything we teach is rule based. It's a set of rules that you learn and follow. We're not speculating. We're not just going out and saying, I think this is going to happen or this might happen. It's all following a set of rules. So you learn the rules, you learn how to read the charts, the rules apply to the charts, and then we enter the different processes, whether it's a new entry or whether it's a management technique. We just keep following the rules. So that's one of the things I really liked about way back in 2006 when I first heard about the covered call process, being an engineer from all my 31 years of working. out in industry. I like the fact that you read charts, you learn the rules, and you follow the rules. So it's not speculation. We don't say, I think this might be going up, or I think this might be going down. It's all based on a set of rules, and that's also what kind of sets us apart.
And with Micah and those guys, I mean, they really don't care which way the stock's going. I mean, I've seen them switch from puts to calls and back and forth many times in that hour session because the market changes. The market goes up. The market goes up and down. It doesn't just go sideways. And why don't you kind of talk about that, Micah? Because that's such a huge difference in the day trader. Day traders are always trying to figure something out and figure out how something's going to go up. Hopefully, it's going to go up. And most of the time, it doesn't happen. CBOE says 90% of them lose all their money. So,
yep. And I mean, especially in a market like this, talk about unforeseen circumstances every day. There's things that happen that we just don't know. We do not know what's going to happen. Things are happening that have never happened before. Even we broke every Dow movement record there was when that first drop hit on the upside and the downside. It's just insane. And we talked about this on a recent snapshot I took. For you, those of you that don't know, we have a video series on Facebook at MicroMoment Trading called Snapshots, and they're short segments out of our webinars that we pull for certain lessons. But we had one recently where we're talking about, how speculators even go about that process and try to deduce what is going to happen based on the news and this and that, and what sort of inside information they feel like they have to this stock. But buying a stock only benefits the stock. People seem to think that companies don't care if you buy their stock or not. They want you to, right? That's the whole point. So certain publicity and things obviously around revolves around stock price, and you don't have an edge. You really don't. So if that core of the foundation, the core of the technique, like we're talking, is based on the fact that the market is cyclical and the only guarantee is that it's going to go up and it's going to go down eventually, then you can work within that.
Why don't you take care of Joseph there? He has a neat comment.
Joseph is an MMT client, just made 3.6% on SPY in 20 seconds while you guys were talking. Happy trading. Yeah, let's do something fun here. Let me I'm doing a Instagram post right now I'm building, but let me open up those charts and we'll see exactly where we've never done this before. We'll see exactly where he got in.
While you're doing that, Frank says Randy was looking at a potential covered call trade on his LFUS. Chart looked almost ready, but the option volume was 0. I've never heard you guys mention anything about the option. What just went off about the option value? Volume, yeah,
about the option volume. But that's because, you see, we're not speculating. The option volume would be critical if you were buying an option and then hoping to sell it to somebody later. You see, we buy the stock and sell the option. It doesn't matter if there's any options out there. We're basically creating the new option and selling it. So someone else is going to be buying it. We want that option really to go to 0. We don't care because we're getting the cash right up front. And then we just want to be called out. And being called out means then we're going to sell the stock at the set price that we already know about. So we already know the whole construction. We know what the outcome is going to be, whether the stock goes up, down, or sideways. So it doesn't matter. If you're just an options trader that's speculating out there, it's definitely critical that if you want to buy an option, that there's a lot of volume so that there's somebody else that's going to buy it back from you when you want to sell it. But we don't care if there's no option volume at all. As long as there is an offer, we put the order in, buy the stock, sell the call, all in one order. And so if it fills, it's done. And then it's an in-the-money option. We just want to be called out, and then we get all of our cash back, keep the profit, and go on to the next one.
Okay, thank you. And this is just from Charles, and I'm going to read it and make one comment, and then Micah can take it over. It says, hello, Joe. You used the example of starting with 2,000 and doing 8 to 12 trades a day with MicroMoment Trading. Can you explain how to get around the PDT rules when starting with 2,000? Before I turn over to Micah, you're right, correct, on starting 2,000 in your trading account, and you're not making any 10, 12 trades a day on that 2,000. My example is 6%. That might be one trade. That would have been today. That would have been two trades, so two different trades. Either one of them would have made that amount. So you may only make one or two trades to get that 6%. These guys do it. Micah, Tim, and Deshaun, they do it easy. Get those guys. So you're not in a situation. Now, it's still important. The question, that latter part is still really important. But my example, you're not. You're just making one or two trades, not a day. You're making 6% a week. You might make one trade to 6% and walk away for the week. Okay, go ahead, Micah.
Yeah, 8 to 12 is very high. We usually don't do 8 to 12, but Deshaun, one of our traders, has a 3-trade rule for him. The amount of trades is always different for everybody. But you're talking about, we actually have a video coming out on this as well, is a cash versus a margin account. So rewatch this, Charles, once it comes out on Facebook. I'll let you know when it's up. We go more in depth, but on a cash account, you can recycle that money. So the cash account, you don't have any access to margin, which is borrowed money, which we tell you not to use anyways. It's like a pre-approved loan. It's very dangerous to use. But on cash, you can cycle that money every day. So it's not so much about the amount of trades as to how much money. So you could do 10 $200 trades or one $2,000 trade. And if you're doing options, that clears every day. And if you do stocks, then it's a one-day gap. But you can do every day on options and just recycle the money however you'd like. So
yeah. Over at MicroMoment, we're not using any stock. We're just using options. So I hope that answers your question, Charles. But it's a good question. Yeah. But that's the beauty of that thing. You're in your mind, you're thinking 10 or 12, 8 or 9, whatever trades a day. Nah, just one or two. Just you only need it a week, 6% a week, not a day. These guys, make average, for the last 64 weeks, 93% a week. We're just talking 6% a week. We'll move that to, and that's the power of compounding, the absolute power of compounding.
And Charles, you have to remember, we're always pushing it. We're always pushing it because we want to give you as many examples every day, and we want to give you as many lessons and, talk about as many different moves. So if we were to do 1 or 2 trades a day, it'd just be boring for you guys. Is honestly how it is. We want to give you more learning material, so we go for more trades. And eventually you can once you get used to it, but it's not a necessity.
And they're not making these trades up. You're seeing these trades when you're in their sessions. That chart is up there, and they're not explaining it, but you're seeing those trades. You're seeing them made over in the part where you do the trades and option change and stuff like that. So these are not like make up things. So
yeah, we reference these charts right here. I know this is extremely unprofessional, but here we are. There's the chart, and if you'll see, right here is actually where that trade from Joseph, I believe it was right after 825 here. So we teach you how to read these charts, and we have a triple Q, Microsoft, and SPY up right now. SPY's on a big run. Well, not very big, 50 cents. But this is what we're going through in real time. You can see that tick still moving. So that's what that looks like.
SPY just turned positive. But that's a critical part, Joe. That is a very critical part. That chart that Micah just showed, that is what makes it possible to do this process and not make it be like the old day trading where you're speculating. This is not speculating. It's because of that intraday streaming chart that's just marching across your screen as trading is going on during the day. If you didn't have that chart, you could not be doing this. You would not have the success that Micah and Tim have and teach all of these people that are having the same successes out there.
Why don't you go ahead and answer Frank's question there, Randy?
Frank, on a secondary call, is there any time you subtract your call profits from your cost of stock in order to compute the called and uncalled returns? Seemed like I heard one of the circumstances where you would. There's two different returns, Frank. There is the called return and there's the uncalled return. So the called return is how much profit do you have left over after you get called out. The uncalled return is if you didn't get called out, you still have a profit because you generated income by selling that call. So no matter which way that it goes, there's a profit at the end of the day, week, month, whatever the expiration is of that call. And so you calculate both of those returns. What I'm always talking about is the called return. That means that the all the equity, the capital that was invested is all returned, and what's left over above and beyond that is the overall return, the called return. So that's what I'm always looking at. I'm not looking at the uncalled return because I just want to get called out. So eventually I get called out, and then I calculate what that return was. And Joe, I just calculated for those 7 positions that I had last week, based on the invested capital, seven positions, 7 different pieces of capital all at the same time. At the end of the week, all the capital was back, and it was a 5.5% return on that portfolio of positions for the week.
Yeah, fantastic.
So that pulls it right in real close to your 6% per week calculation.
Yeah. It's fantastic. I mean, it's just fantastic. I can't talk now. It's fantastic what's going on with this stuff. And the both with your trades and with Micah's trades, people are seeing these trades, and they're seeing them as they're happening, and it's exciting. And when they go to webinar, in the case of the micro moments, we have people reporting, and they report if they have a loss. Like we had Martha. Martha's always double-digit profits, but she had a couple of small losses, say 4 cents or 3 cents. It doesn't make any difference. She's learned how to get out of them, so they're not 30-cent losses or 40-cent losses. Things go up and down, and you pretty much just trade the volume on those micro moment trades. And that
today was our biggest loss in maybe 7 months or something, 6 months.
It's about a nickel, I think.
Yeah,
something like that.
Yeah, just make them few and far between, and make most of them negligible. And
yeah,
I mean, it's just like the market is guaranteed to go up and down. You're guaranteed to win and lose.
Yeah.
Every single trader on the planet has taken a loss, many losses, like every single person. So, are you going to try to avoid it like the Black Plague, or plan for it when it happens to make it as small as possible?
Yeah, and the difference between Randy and Micah is Randy's bought the stock, or he's bought the leap, which stands in place of the stock. He can sit there and manage that position for months and years and forever if he wants to. He has one technique. A lot of people just like dividend paying stocks. They don't want to ever sell them. Well, he's got a technique where you can double and triple your dividends using his covered call technique without any possibility of possibly losing the stock. And so, you think you're getting, 3% dividend. Well, you're using that technique, you might end up 12 or 13, 25%, return. And over here with Micah, he's in this deal for just a few seconds. He's going to be out, and he has one key: eliminate that loss, minimize that loss. That's all you have to do, and that's what our clients do, and that's why they make such huge returns. Because remember, when you're paying $2 for an option that you're buying and selling, versus for the same stock, what was Tesla? Hundreds of dollars, right? Hundreds.
Tesla's at $1,588.
That's right. Yeah.
That much?
Yeah.
$100. Wow.
Almost 1,600. It traded up over 1,689 today.
Yeah. Micah could probably get into it for, if it's that much, for what? $2, $3, something like that, Micah?
No, the options are ridiculous for it. It's the only one that's blown out of proportion. Yeah, they're like $40. It's the most obscene thing I've ever seen.
Yeah.
On the option chain. Yeah, it's not even a stock at this point. It's just some.
Yeah, it's not really one. Other than I entered it at the end of yesterday, intention of getting out today, but I haven't traded the Tesla in.
Yeah, I mean, there's a lot of
it's crazy. It's crazy.
They're talking about a 10-to-1 split, which would be really helpful. If they actually would do that, it would bring it down to $160 a share, and it would bring the options to about $3 to $4, which would be totally playable for us. So that would be fun. And if it gets listed on the S&P, it needs to happen. Otherwise, there's going to be big problems for SPY, SPX. So I think they'll probably. I mean, it might even be conditional of them joining the S&P.
Yeah, most of your SPX positions are really cheap here today. $1.89, $1.87.
Yeah.
For the option you're buying to turn around and sell. So that's huge leverage versus the S&P price, normal S&P price. Yep.
And the cheaper the option, the more you get out of it. Obviously, if you make a cent on $1, that's 1%. If you make a cent on $2, that's 0.5%. So, applying that to the fluctuation we've seen in the pandemic, I mean, it was for an isolated time frame. So, you pick one expiration, say 1 day out at the money SPY was about 70 to 90 cents pre-pandemic.
Yeah.
It spiked up to $6 or $7 for the same thing, same time. Just it's a weird form of inflation that happens because people use options for protection. And like Randy, he does some management techniques with options. So we saw a ton of inflation, and that's now coming down. It came back down from 6 or 7 to about $1.50 now, and it's starting to equalize. So it's just takes time for that.
Yeah, I could tell now because you've done tremendous things. I'm not even know all the details, but on your Facebook and stuff, tell them again how they get over there because you're putting all this fantastic info on that. On that Facebook, tell them all those things they can get to. Besides coming here, besides just going to YouTube and put in MicroMoment Trading, and you're going to get those sessions, those hour sessions live or not live. They're a couple days old, so that I can do you can get as far as picking the stock, but you're going to see what they do. Go ahead, Mike. How do they get to your stuff?
Yeah, we are at MicroMoment Trading on everything except LinkedIn. There's an LLC at the end. So we have just ramped up this last month and a half, really building our social media presence and figuring out how to do that. We've been structuring. So we have a bunch of content scheduled to post starting in August, maybe a week sooner. We're going to have a bunch of posts coming out. Right now it's on Facebook and YouTube at MicroMoment Trading is the majority of our current content, but we're going to have it on those two, and then Twitter as well. LinkedIn, Instagram is going to be pretty heavy as well. So that'll start in about a week and a half. There's going to be daily stuff on there.
Yeah, we only have a couple more minutes of time left. Does anybody have any late questions or anything? You want to shoot them up, we'll throw them up and answer them, or comments? So, okay, guys, we will call it a day. Thanks you very much, Micah. Thank you very much, Randy, for being here. And so we'll see all you guys tomorrow, I guess. Okay. Thanks for tuning in. All our folks out there, we really appreciate it. Okay, I'm going to cut this off now.
Take care. Have a great week.